Good morning, everybody. Today is 28th of December, 2020. My name is Neville Hornsey. I'm a market analyst for YouTrading. And
hi, everybody. My name is Joel, also market analyst for YouTrading. How are you doing this morning, Nev?
Very good. Christmas is done. Looking forward to the new year. And obviously, trading started with a bit of a pop today. So what did you see in the fundamentals and the news?
Yeah, well, I mean, it's almost, like you say, it's almost the opposite of last week. Remember, we were talking about risk off because of bad coronavirus news last week. It was all about the mutant UK variant and all that kind of stuff. But this week, feeling a bit more optimistic. I mean, I think there's two things really going on as to why the S&P 500 futures, for example, are higher. Number one, Trump backed down on his threat to veto the stimulus bill in the US. So he signed that. Or sources said he's going to sign that. I don't know if it's 100% confirmed yet, but pretty much markets are now pricing in the fact that stimulus is going to pass. And number two, this was expected, but the European Union is rolling out its mass vaccination program. So that's getting underway a little bit late compared to the UK and compared to the USA, but better late than never. So I think those two factors combined probably giving a bit of boost to risk appetite this morning. You got anything to add?
Only that the UK and Turkey have signed another deal, and I wrote down somewhere that's one of the top five that we've got over the last since this whole Brexit saga.
That's true. Yeah, that could well be helping UK. Well, actually, no, UK equities aren't even trading today. Forgot about that. It's UK holiday.
But in terms of like the sort of the vibe, Asian markets were on the back of what you just said about Trump and there's and it's good that I guess anyone that's in America are going to get their unemployment benefit rollover, and people aren't going to get chucked out of their houses. There's that moratorium on evictions. Hopefully it is risk on and goodwill to all in the USA.
Yes, exactly. Does it definitely, like you say, removes a big downside risk to the economy via lots of those nasty things you were just saying happening to people.
Yeah, I guess if we just look at the charts. Okay, so it looks like we're trading back. If I just get my crosshairs. Yeah, so that was the last time we spoke on the 21st of December. It was a bit of a start, roughly where we are trading now. We had a big down day, and then it just the next few days up into Christmas just traded inside that range from Monday. So we're back to where we were. But obviously, if we just go to the weekly, get above last week's high, and then we're back to all-time highs, and 4,000 might be the target on the back of all of this extra stimulus. So we shall see.
We shall see. I mean, you know what's going to happen. All the US government's going to issue all this debt now, and you know who's going to be buying all that debt? It's going to be the Federal Reserve. So that combination is definitely is probably going to continue to support the stock market going forward.
No, definitely. And like the weaker dollar as well going down, that looks like it's not going to stop. So it does seem a bit like whatever happened in 2020 is going to carry on all the way through to 2021 and then some. So just switching over. This is the daily chart on the US dollar index. If I just go to the weekly, I think it sort of shows that we're trading into that consolidation area still, pushing in to the 2018 lows. And if we can get beyond the December low, then it's just downhill all the way to 88 handle maybe. So the dollar is definitely weak all the way from the pandemic high for the US dollar. And then,
what else are we looking at today? WTI, it's a bit boring on the supply side at the moment, to be honest.
OPEC
in terms of
increasing, aren't they? January 1st, they're still on about increasing their production. So
but that's been priced in since the end of November or very early December. So in terms of what's been driving the intraday price action, WTI and crude oil markets in general have been very much focused on macro, like global macro risk appetite type stuff. So kind of just trading like the stock market at the moment, really. So seeing some nice gains this morning on the back of the optimistic things we were just talking about, stimulus and and vaccines and free trade deals and other positives.
Yeah,
You seen anything?
Yeah, the only downside
No, go on.
I heard, like in terms of macro, was Israel doing a full lockdown, and I think the crude markets might start getting a bit twitchy if more countries, like bigger economies, start locking down further, then because of this coronavirus stuff, then I guess oil takes a hit then. But at the moment, it just looks like it's getting that for that $50. I think it really wants to touch that. So
Yeah, I agree. Because last week, like obviously we had the UK going lockdowns increasing quite a lot, and in other countries in Europe as well. And I think crude might have finished the week slightly lower last week, but broadly it has shrugged off lockdown concerns so far. And I think it must just be that crude oil market traders are more focused on the future, as in when we've got herd immunity from the vaccines in 2021, when we've got the roaring global economic recovery. I think a lot of these traders are more focused on the long term than the short term.
Yeah, and I guess
that can change. That can change, but for now, that seems to have been the case.
Yeah, I guess if you look around the news, we'll see like there's 4 companies bringing out vaccines like for 2021. There's also like congestion of all the shipping containers that are like locked into countries in the wrong places, waiting to be shipped. So it's not like trade's not happening at all. It's just there's been a bit there's a backlog now. There's like a 3 to 4 week backlog out of China. So there's things still to be moved around the world. So oil's I think technically oil is looking for the $50 handle, and is pricing in, like you say, the future good news that should come with the vaccine data. We're trading at a sort of inflection point now, which is the sort of 48 to 50 handle has been like a place where traders have definitely done a lot of business before. If I was, if it wasn't the 50 handle that I thought they were targeting, I'd say it was the swing high from February 2020. And that would be like a technical sort of supply zone. That hits also the 200 moving average for the weekly time. If we were to get above those roadblocks in terms of price action, then there's like a big volume gap there, really, all the way up to 60. But to get all the way up to 60, I mean, the world would have to not be talking about coronavirus, I think. So
maybe by the end of 2021, though, you think? Well, that's a long time.
Yeah, I mean, having seen it all go completely pear-shaped in 2020, maybe the Saudis and everybody decide to cut rather than, produce more. And maybe then they decide that they'd rather have a higher WTI price. But at the moment, it just feels like I think it's going to sort of level off here. The next one would be gold, I guess, as a...
Gold, yeah.
That's on the active trader platform, gold hit 1900. So
pretty much price action this morning. We've seen a bit of upside as a function of dollar weakness, I guess. But now we've pretty much unwound all of those gains. And I imagine that's because, a lot of people might be thinking, oh, it's quite risk on because of the stimulus. So maybe you don't want to be buying into safe haven gold. But I think, to be honest, for me, this stimulus story is a positive for gold because of what I've already said, actually. All this new debt from the US government is pretty much going to be monetized by the Fed. They're going to be soaking it all up in the secondary market via their QE programs. And the more they do that and the more they expand their balance sheet, that is typically a positive for precious metals because, expansion of the money supply, weakening of the dollar tends to be a positive for gold. So we might not see that immediately, like we've been choppy this morning, but I think gold remains supported going forward.
Oh yeah, so like at the moment on the on the daily chart, gold,
if we break above that, that'd be good.
Yeah, it's to a lot of traders that would be like a bull flag. So if it does break to the top side, then it'd be good to sort of see maybe the classic retest where you break out, pull back, and then off she goes. precious metals and oil, they've done the best so far, haven't they, out of the weaker dollar. As an inflation hedge, when we've got no inflation, it's hard to sort of see the luster of gold, if you like. Yeah, we just need a weaker dollar and then break out this bull flag and off we go to 2000 again.
When you say about the inflation hedge, though, I know what you mean, because you like when you look at consumer price inflation, that's been very low for a long time. But remember, gold is, it's an asset alongside other assets, and asset price inflation in the last, however long, like 2 decades really, asset price inflation has actually been really, really high. If you look at the returns on house prices and stock markets and other, even fine art and all these other types of assets that people invest in, has been, inflation on those asset prices has been high and is probably going to continue to be so. And I would imagine that gold has the potential to continue to sort of respond to inflation in those asset prices. Yeah. So, I don't know, mate. It's a weird one, because it is, when people think of inflation, they tend to think of like CPI, which makes sense. But I think you also have to consider these other assets as well that are actually part of people's lives. Like, people have to pay for housing through either rent or their mortgages or whatever. So that's definitely one to watch over the next decade, I think.
I guess if the sort of governments were doing the stimulus and it was all going towards consumption, that would be inflationary. And like you say, the asset prices for big ticket purchases, mortgages make up most of the banking lending. But at the same time, lending's getting constricted at the moment because people are sort of willing or not willing to lend, and consumers like myself and you probably are less likely to spend. We're kind of all hunkered down. Apart from like shopping online, it's really hard to go out and spend your money. So maybe once we get the coronavirus pandemic stuff out of the way, then there'll be a lot of money ready to be put back into the system. So that might be the signal for gold to break out. So
when, like you say, when we're spending on holidays and items again, instead of just being hermits or in our houses, that could spur some inflation that could help gold.
I think the EU ambassadors are meeting today. I think they're not going to do like all of the countries' heads. They're just going to do, like a core bunch of ambassadors to agree it. And the UK politicians get their vote on Thursday, I think. So
they do. And I imagine it will be a resounding yes, because obviously Conservatives got a big majority in the House of Commons anyway. But then I think Labour's probably going to vote in favour as well. So you got
I only heard
no hiccups there.
Yeah, I only heard a few ERG members saying that they might have things that they'd like to amend, but I haven't heard anyone say they're going to not vote it forward. Nigel Farage thinks it's a good thing, so he's the instigator of all this. So
yeah, my goodness, if he says yes, then
just get it done. I think that's the thing now. I think most people just want to get it done, and if the EU and UK can be happy, then we'll all have a fish diet in 2021 onwards. So.
Yeah, sounds like it. I think as far as GBP is concerned, I mean, to be honest, I think it's the end of an era for GBP for the most part. Brexit's been one of the key drivers of GBP for a long time, but assuming no hiccups going forward, one of the most important risks that's been driving GBP, this risk of no deal, has been just completely taken off the table now. So GBP, it's going to be interesting to see how it trades going forward. GBP hasn't really cared about other UK fundamentals for a while now. Like, it doesn't care about UK data. It cares a little bit about the Bank of England, so maybe it starts to care a little bit about those things again. Maybe it just trades as a function of the dollar. So it's going to be interesting.
Yeah, looking at the pound versus the dollar on the weekly, trend lines get redrawn again, but at the same time, a trend line from 2007 high all the way through 2014 to sort of 2020, and we broke above that. So if anyone's watching anything, it would have been the 200 period moving average, a trend line, and we've taken out all the highs, the swing highs. So there's not a lot left other than one spot 4 big handle, and then maybe this double top from 2018. Data out of England's not particularly brilliant, probably going to go into double dip recession, but at the same time, a much weaker dollar. You can't push the pound much more. It's done.
Yeah.
The big one was the great financial crash. Then the Brexit decision, wasn't really a big move compared to the big sort of GFC. And then coronavirus just took out the stops from below Brexit, really. And since then, we've just made bullish moves. So, but yeah, slow and steady. Yeah.
I can't imagine us recovering back to those pre-financial. Well, this is talking like in years and years' time.
Yeah, no, exactly.
But I can't imagine us recovering back to those pre-financial crisis levels, to be honest, because like we've been saying, you just mentioned it, but like fundamentally, the UK economy is still pretty weak, even when you take away coronavirus. Like we've been running these massive trade deficits and balance of payments deficits for years now, which implies that basically as a country we're spending beyond our means and have been for a long time. So,
but everyone said like with Brexit it'd be like a short, sharp hit to the UK economy, and then we would rebound, like never before. But at the same time, that was pre-coronavirus, and a double dip recession going into 2021 is not a great way of starting life, especially when it's unknown of how the EU is going to impose anything on us if they are to. So we've done like the major topics in this thin trading week, and I guess coming into next week we should have a lot more. More info coming through because traders and markets will be fully open. So
it will get interesting. Like you said, this week is going to be dead because it's. Loads of people that I know are just having the entire week off. So I think that's probably that's the theme market wise. And there's not really anything interesting on the calendar at all this week.
No.
But then next week we're going to have NFP for starters.
Yeah.
And we'll see. Things volumes should pick up.
Definitely. 2021 would be an interesting one. And just get through this quiet week and see how we go.
Nice one.
All right. Have a great week and Happy New Year if I don't speak to you before then. And,
Cheers, mate. Cheers, mate. You too.
All right. Take care.